Another big boys that we spoke with about half an hour back, Mark Mobius of Franklin Templeton Investment joined us from Hong Kong, and we began by asking him whether the border issue worries him a lot about his investments in India.
There's no question that these problems will arise from time to time, particularly what you're seeing in Europe with Deutsche Bank. That affects the global marketplace because people get concerned about banks generally. But I don't think that is going to have a big impact on India going forward, because the reform movement in India is ongoing and is very, very beneficial, and we have complete confidence that India will move forward and the market will do very well.
Mark, hi, good morning. The worry is that will liquidity suffer, will fund flow suffer because of the news flow, and will we go through a period of protracted uncertainty and correction? Is that likely, and would that be buying opportunity?
I think it's a buying opportunity, and I think going forward you're going to see a lot of more reform movements. The implementation of the tax reform is very important and is just beginning. So I think the impact of these reform movements will have a very positive move on the market.
Mark, how are you looking at the way in which the global markets themselves have been receding from their near-term and all-time highs? The US markets, for instance, on an excuse which is not really connected to them, like Deutsche Bank. Are all markets suffering from overvaluation? Will we see protracted falls in global markets?
There's two things happening. First of all, with these problems in Germany, for example, with Deutsche Bank, with the slowdown of the U.S. market, money is now moving into emerging markets, particularly India and China. So you're going to see more of that going forward, which will tend to move prices up in these countries. In addition, the valuations of the Asian markets, particularly India and China, are much more attractive than those of the U.S. and Europe. And then finally, if you look at what's happening on the ground in these countries, the positive developments are very, very good for these markets and will have a positive impact on the markets. So I think we have to expect more up movement in India than down movements.
Okay. Mark, when you talk about valuations in India, are you looking at the relative valuation? Because on absolute valuations, the Indian market is trading above median valuations, and it's moved up a bit over the last, say, 6 to 9 months.
You have to look at these valuations in relationship to interest rates. If you look at interest rates, how they're moving down, you just have to do a reciprocal of the interest rate. For example, let's say interest rates are 1%. You can then tolerate 100 times price-earnings ratio. If interest rates are 5%, you can tolerate 20%. So looking forward, I believe with continued lower and lower interest rates, particularly in India, you will be able to tolerate much higher valuations.
Okay, like how much? At the moment, probably the Nifty is at current levels tolerating 17 times, 18 times. How much more will you tolerate?
I think you can go up to 30 times. There's no question about that, particularly with the interest rate environment looking so benign. Interest rates in India should be going down as the reforms kick in.
Okay. Mark, you are a big investor in India. I want to know, how are you looking at some of the big sectors? Financials have led the rally in India, but the IT sector is going through a bit of a problem. And the stocks are available at cheap valuations, but the business itself is under a bit of a cloud. So going forward, how would you look at investments in financials and IT, the two big spaces in India?
Financials, of course, are going to go through a contraction in the sense that with narrowing margins, these financials may have some problems. That will result in consolidation and mergers, acquisitions, that sort of thing, which I think will be beneficial for the industry. As regards to the IT sector, of course, the software people are going through some slowdown, particularly because of what's happening in the developed countries. Growth rates in those countries are slowing down. That impacts them. But if you look further afield in the internet sector, many failures, there's no question about that. but the survivors will do very, very well because internet is now growing at a very fast pace and is integrating into many, many different industries in India.
Okay. Well, finally, Mark, what's top of the mind recall now that the markets have given you an opportunity to buy? What would you grab?
Consumer, consumer, consumer. That's really the story is. And I believe going forward with consolidation and a softening up of the situation in the telecom sector, I think that would be an interesting sector as well.